All right, we have discussion, information.
Chief
Chief,
Financial.
I always skip over you. I don't know.
Sorry,
He just
Scott.
does. Got to put that bold
He
on.
wanted you
Yeah,
to leave an
got it.
audience here for him.
It's okay.
Chief Financial Officer report. All right. Yeah.
Okay, I'd like to highlight the May 2018 financials. This is 11 months of our current budget. That's 92%. If we look at the first report on board book page 24 and look at the May 2018 financial report, our total monthly revenue for all funds was $550,000. Our three biggest sources of revenue for the month are real estate taxes, general state aid, and corporate property replacement taxes. If we look at our total monthly expenditures, that totaled $1.86 million. Salary and benefits, which is our largest expenditure, which accounts for roughly 72% of our overall expenditures, that was $1.48 million. And our out-of-district tuition for the month of May was $78,900. Our operating fund balance at the end of May were $17.2 million. I do want to bring attention that the board has restricted $3 million in the working cash fund. So our actual operating fund balance at the end of May is $14.2 million. If we move on to board book page 25 and look at the financial statement for the month ending May 31st, you will see our beginning balance plus our revenue for 11 months minus our expenditures, showing our ending balances in each fund. On page 26 of board book, it highlights the revenue. You'll notice that in our operating funds, our four big main funds were at 3 to 4% over budget on that. I'm not expecting much revenue to come in within June. We will receive some payments from the state for our general state aid. Currently, we're sitting at about $830,000 over budget. I'm anticipating to be closer to $1 million over budget on the revenue side. If we look at the expenditure side, you'll see that in our operating funds, we are tracking at budget or under budget. If that trend continues, that will be a good thing. Overall, for the year, looking at what our revenue is and what our expenditures are, looking at potentially, at best case, a slight surplus, and at worst case would be a slight deficit. Ultimately, what we're hoping for is to come in at a balanced budget that's out there. I do want to...
Wait a second. What was the original target for the beginning of the year? What was the deficit?
$326,000 deficit.
And you just said you're going to come over about $1 million over on revenue?
Yes.
I didn't hear you say what $1 million in expenses we're going to come over on.
If it comes in at budget and with the revenue there, what I wanted to bring to your attention is that we did receive some property taxes that were supposed to be distributed in FY17 that came into FY18. So with that being said, with everything factored in, I do see us being better than what was predicted at the beginning of the year.
So on a cash value, we're looking higher,
basis.
but when the auditor comes in and accruals it,
But we do it on a cash basis.
right.
Cash
Our
basis
treasurer runs on a
reporting
cash
and
basis.
Let's
then
not
our-
confuse people here.
Right.
Yes.
There's only one person who understands the accrual, and that's the auditor.
Mm-hmm.
So we started at a 326 deficit. We're at $1 million, about $1 million over. We're going to be on revenue.
Mm-hmm.
So we're going to be somewhere in between the $700,000 or $680,000 deficit or
Surplus.
or less.
Yeah, I was just kind of factoring in with those additional taxes, with it. So that's where you would get the slight surplus or a slight deficit, depending on if anything major. I don't think anything major is coming in June with it, as you can tell with the board bills that are out there.
You did a summary of the the revenue and expenditures. You had some questions submitted. Do you want to just touch on those?
Yes. There was a question about boys soccer stipends. There were, in the new contract, it has increased. There was one head coach and increased to 3 assistants. The previous contract had 2 assistants only. It was an oversight on that.
Well, the question isn't about your budget being off, it's about the way you're explaining it. The contract doesn't set any number of coaches for any team. It sets what the pay rate is for them. The board decides annually when the principal and the superintendent recommend the coaching stipends, how many coaches we're going to have. I just want to make sure we don't say that. The contract does not set the number of coaches for any sport, right?
On the page after that, it lists a chart where it lists the head coach and the number of assistants per sport in the contract. I think if the numbers were reduced, we could go to the stipend committee that's defined in the contract to reduce the number of stipends or increase the number. So in that contract, it does spell out that 4 coaches were added in the 16 through 19 contract. And then the next page, it has a chart where it shows how many assistants and how many head coaches under each sport. What changes every year is we can reassign those to every student, every employee. Nobody is retained more than 1 year.
Okay.
Correct. What you're saying is correct.
Okay.
There was a question on the amount of taxes that were distributed for the current month and why they were, a third of them was in prior year. That's just how Cook County distributes the taxes. There's no science as to how they're going to be distributed or what tax year they're going to be in. It all depends on when they make that distribution, what year they're actually for.
Well, I keep asking you this. Are you saying the county doesn't actually match the receipts for what people say they're paying? Because that's what it sounds like you're saying, and that would, I don't think, follow the law. So I think it's still something you have to get more information about. I don't think the county can just willy-nilly say this is this assessment, that's that assessment. That's why you have to give him your bill when you pay it, so you match the payment with the bill, right?
When we went through this, from the questions on this a while ago, I had Scott give me what he receives.
Right.
It just gives him a summary,
gives
and
me
it's
tax
assigned
year.
by tax year.
And I understand it, but let's assume the county is doing it correctly, because they should be, right?
Mm-hmm.
So the question really is, why are we getting such high receipts still for the prior assessment? You know, it's not, I'm not suggesting the county is doing it wrong or your research you did was wrong. It just doesn't make sense to me that we're getting a third, at this time of the year, a third of our receipts are from the prior assessment. It doesn't, it's not logical to me.
Well, what if people paid late, Tim?
That would be the answer, but you think, you know, a third of the receipts are coming up from people paying late the
Well, if
last
their
time? It could
property
be.
was in foreclosure, or you have some properties in probate, or we've had a lot of sales in Brookfield, that could prolong money being transferred for taxes. And then, once the property is sold, there would be the catch-up in taxes to the new owner of the property.
I think we're speculating. Why don't you get what their interpretation of why they're classifying it that way? And,
Okay.
you know,
I will do.
I mean, there's a variety of reasons
do my
that
best to
potentially
get an
be, I
answer.
know, get a better answer from them.
Can we track how much 17 we got in 18 and 16 we got in 17, and then we can figure out how much 18 we're gonna get in 19? Because,
I'll have to
I mean,
work.
is
I'll
there a
work through the
windfall
auditor
coming
to
next
try to
year
come
that
up with how
give
to
us-
accrue all that and how to determine what tax year it truly was for, and I'll see what I can do to work with the auditor.
It just seems crazy.
My problem is,
Pays on time.
this is far and away pays all of our bills. And I feel like we don't know how we're getting it or how it's coming to us. And if we don't know how it's coming to us, we have a hard time every year when we do the budget estimating what we think we're going to get the next year. That's what my concern is. It's like, this should be like something somebody here knows like the back of their hand, how it's working, how we're getting receipts, so that we're careful in predicting our future revenue, because we're getting into years when we're going to do deficit spending, and we have to understand this well. to make sure we're like this. We think we're gonna, we're $1 million over in revenue this year. And I'm gonna guess. we're gonna come-
600,000 was from taxes that got paid in July.
For whatever the reason was, we knew that last July, what was happening with the tax payments.
That's
They'd
what-
already been received.
That's what you promised me. Well, we did the budget. Well, we're gonna get this extra money, right?
Because we knew
And
before
did.
we approved last year's budget that prior year tax revenues came in before we even approved the budget.
Right.
But we didn't account for it in there.
Mm-hmm.
So we're still talking about adjusting it. And I'd like to see this year, we don't have to do that. That we are confident that the numbers are falling into place with the right assessment period. And that we have a much better hand. We're probably going to come up about $500,000 surplus this year. Somewhere in that range, I'm guessing. Which is going to be maybe $400,000 or $500,000. It's a $750,000 difference. That's a lot of money when you're talking about deficit spending. And I think we just have to get a better handle on this and make sure that we know what it is so that if we have to approve a budget again next year that's close to deficit spending, or which is what we're proposing right now, we have a better comfort that I don't have to say that Wes again, well, we're going to come over 500,000 over probably, because it's a discomforting, at least to me as a board member, that we just can't get our hands around this. I mean, we should be able to get our hands around it and understand it very well.
And maybe you're going to come back and they're going to say you won't get your hands on it. I know in the month of May, Cook County does a tax sale, so and they get tax receipts in for delinquent taxes. This could be the receipts on those delinquent I don't know, but we're speculating here. So I think the best thing is to try to get clarity from,
I'll do everything I can to get
to see
clarity.
why you get a big flush of receipts from a prior year tax in this time of the year, type of thing, and why it's being categorized that way.
Also
And
work
get-
through Chris, the auditor, see if he has a contact maybe at the clerk's office or,
Or who?
because I understand, as much as the board wants to get, Cook County is Cook County, but maybe the auditor has somebody that can better help us with some
Or
direction on this.
Our attorney at Frantic who does the appeals, but they understand it real well. That's another person you could ask. Isn't Frantic who does the
Yes.
appeals?
Any other questions on that you have to cover, Scott?
Yes. On board book page 52, under the cell phone account, under operations and maintenance, it is over budget by about $2,500. What happened here is there's been some staff replacement phones that had to be purchased, and then there were also staff members that put in for reimbursement that should have been for last year that hit in this year. Moving forward, I have corrected this, where all staff members that get reimbursed for their cell phone will be turning in their bills either on a quarterly or a monthly basis, so that it won't carry over into the next one. And this line item has been increased for next year in the tentative budget.
Thank you.
Any other ones?
Nothing more on the revenue expense.
Is that it for everything you wanted to cover in chief financial?
No.
Okay, what else you want to cover?
In your board packet was the summary of the student activity accounts for May. There are a couple that are negative. Pupettes is doing a fundraiser, so they purchased some stuff. The money will be, once the fundraising gets done, it will be redeposited in on that negative. And as far as moving after the student activity report is the life safety update.
I have a question. I think I asked this last time. The testing was for AP, is that correct?
That is for AP testing.
And you got
yes.
all those bills already paid?
The bills should be,
Because 126
there
came
was a
through.
big chunk that was paid. I don't know if there's still a couple that are still hanging out there with it as they finalize actual test giving to be scored and everything. So that's, but I know a big chunk was paid.
Is it going to be another third coming through?
That I do not know. I'll have to look into exactly what is outstanding.
Why don't we make note to follow the testing account, see if Jen can pull a 3-year historical, because if it historically gets wiped down, otherwise we need to maybe
Transfer
create a
the
board
funds.
account
Right.
so that those fees aren't carried over every year in the testing account, they're put in a board account. Okay? But let's do a 3-year historical, we can report back on that in June, or July.
Okay. If we could go to, let's see, what's,
65?
for the life safety summary. We did have a facilities advisory council on May 24th. This is kind of just a update as to what will be happening over the summer and what will be addressed in our life safety amendment 22. So if we look at the summer and fall of 18, we're going to be having fire sprinkler work done, smoke detection, replacing interior fire doors. There will be concrete work being done, electrical work being done, plumbing work being done. As you remember, this amendment has smaller items on it, not the large items like we had the previous summer with the roofs. So they're being addressed either internally, that the district is purchasing the supplies and Airmark is getting it done on their time, or we're paying Airmark to do it on the weekend. The only big project that will have to have an architect, engineer, and a contractor will be the Soresco unit, which is the pool HVAC. That is projected to be done the following summer. We're in the process of seeing options and exploring options that are out there. This is anticipated to go to bid in October of November of this current year to be set to go for the summer of 2019. The last thing remaining with the life safety dollars that are out there, we do still have 3 sections of roof that needs to be completed. So that'll be after we get done with life safety amendment with the leftover money that is available with that, plus what was left over from the previous project that will be addressed, the roofs will be addressed using those dollars.
Plus our architect said the roofs have a couple of years left.
They still have some life
That's
left on it. That's
we're
why
delaying it too, right?
Correct.
we don't really want to do it right away as long as they're still functioning and okay and not leaking. Some of the stuff that has been already completed, fire sealed wall penetrations in multiple areas, installed new pool lights, adjusted door closers, installed several doors, closers in different areas, and electrical work has been going on nonstop with installing panic hardware, LED exit signs, and putting in GFCI outlets all over the building.
Were there any questions submitted on this, Scott?
No.
I think one other thing, and I'm not sure what page it was on, that Joel mentions with some of the work that was done on the drainage, et cetera, we aren't getting water in the basement like
We are not
used to.
getting water currently
getting
in the
better.
basement. With the plumbing work that is being done by Burns, because they're the company that went through and did a lot of the work with the renovation. They're down there doing exploratory work. We're hitting it when it comes in with the water. They got cameraing going on, so they're addressing it. Don't know if we're going to continue to have to keep doing it, but like you said, as of right now, we are not receiving any water coming into the basement.
So talking about that, I'm throwing this out of the blue at you. The village of Riverside's talking about putting a berm on one side of the river, and there's concern that that will displace the water to come onto the west side. Have you had any involvement with seeing what the Army Corps of Engineers plan is and to see how they're going to address where all that excess water is going to go?
No, I have not.
So that we don't flood?
I have not, but that will be
We'll throw
something
that
that
out.
will be on the radar now.
Okay, thank
As
you.
we move forward, definitely to.
Well, I would think you need to, because I think the village is bringing that up pretty soon on their scenario. And then maybe you need to see that maybe they'll throw an indemnification clause, an insurance,
Yeah,
to
right.
ensure that if they're
Who,
going
the
to cost if they're
Army
going to
Corps
cost the
engineers?
district,
I
if
don't
it
know
winds up
about
being that
that
we
one,
flood it,
Just look into it, Scott.
Look into it, thank
into
you.
it. But then the last thing in the chief financials report is the quarterly business review done by Airmark. In this report, you'll see who our Airmark staff is. You'll also see in there all the work orders that are being complete, all the inspections that are being done, and it also goes over timelines with summer projects. During the summer is the busy time for the custodial staff and the maintenance staff tidying up the building, cleaning classrooms, lockers, doing the floors, painting areas. So you'll see all that in there. And then you also see how they're addressing that Life Safety Amendment 22.
Thank you, Scott.
Thank you.